This is Akashvani. In the weekly program Current Affairs, now we bring you a discussion on India's economic growth story and the future roadmap. The participants are Surajit Gupta and Shishir Sinha, economic analyst, and Arjun J. Chaudhary, anchor.
We are joined in the studio by Shri Surajit Gupta and Shri Shishir Sinha, and today the topic of discussion on this Akashvani program is India's economic growth story. We would be discussing about India's productivity, what the IMF projections are for the calendar year 2023 and the calendar year 2024. The IMF have projected a 6.5% growth for 2023 and 5.7% for 2024. We'll try and understand what the production levels are overall, the economic activity that has led to consumption and investment in the economy. So, warm welcome to both our experts, Surajit Gupta and Shishir Sinha.
Thank you.
So, Shishirji, let's begin by understanding India's gross domestic product, the GDP, that measures the productivity levels of the economy. We've had the IMF project 6.5% for the calendar year 2023, not the financial year, but the calendar year 2023. What is your assessment of that projection? Has India achieved it, and has India gone beyond it?
Arjun, let me first clarify this number 6.5% is for the fiscal year 23-24. And they always say 23, but it means fiscal year 23-24. So 6.5% is also the government projections during the presentation of budget. Now RBI has revised this growth forecast to 7%. And at the current trend, if we see the quarter one number and quarter two number, 7.8% and 7.2%, we understand that 6.5%, the growth rate for the current fiscal will be higher than 6.5%. It could be something in the range of 7% or 7.1%. And obviously the region is the manufacturing sector has shown excellent growth during the first two quarters. And even in the third quarter, where we have seen a lot of festivity demand, that will also have a positive impact on overall manufacturing. At the same time, services sector, we have seen good growth in terms of the air traffic passengers, good growth in terms of the hotel rooms booking. So we believe that the growth rate will be higher than or near to 7%, what has been projected by RBI, and it will be certainly higher than what the IMF projection, it is 6.5%.
Surajit, what is your view on the productivity? We've had some opinions about travel and tourism. Manufacturing has picked up. Maybe you can cite some figures from factory output and the index for industrial production.
Well, if you look at all the indicators that are tracked, which are called the main indicators, they show some upward movement and they have been all robust. For example, manufacturing PMI, the Purchasing Managers Index, although it has slowed a bit in December, but it's still robust and above the 50-point mark. So that is a very good sign. The services sector activity, the details of which were released today, also shows that it is at a 3-month high in December. So both manufacturing and services have been doing well. Of course, there are areas of concern. For example, the slowdown in somewhat in agriculture. Then we have the private consumption also, which has yet to pick up. We need more private investment to pick up, but government capex has been very high. So overall, despite the challenges on the global economic front, the economy seems to be doing well, powered by domestic demand. And we will know in a short while from now what the estimate for this year is. And we would get to know whether it's closer to 7% or a little higher. But it should be, as Shishir pointed out, it should be in the 6.5 to 7% range.
Shishirji, what's your take on how the government has managed to tackle the headwinds of inflation and, for that matter, deflation as well? What's your view in terms of not only the monetary policy but the fiscal policy of the government to ensure that the consumer price index and the wholesale price index are in control?
So if we talk about the inflation, important is consumer price index, that the CPI, what we also know as the retail inflation. So we are seeing some kind of upward movement in retail inflation because of the higher prices of fruits and vegetable along with the cereal and the pulses. And that trend is likely to continue for some more time, at least for next 2 months. So we will have the inflation rate at a higher level. But the good thing is that it is not going to breach the 6% psychological mark, which is the upper band of the targeted inflation range. So if it breaches 6%, that causes some sort of concern, and then it warrants some kind of action from the Monetary Policy Committee. So as of now, we have some measures from the government side, like ensuring higher supply of cereals in the market, and also along with the pulses. Like if you can remember, yesterday, Home Minister launched a special portal to procure tur dal, and he has also announced that in the coming year, we are not going to import the tur dal. So that is one good thing happening, because the pulses and the cereals are something which are the major area of concern. So if we manage to control that, then the inflation will be within the range of what we call as the inflation targeting. Also, we should remember that the fruits and the vegetable are the cyclical one, or what we call as the seasonal ones. So we may see some kind of surge in the fruit and vegetable prices, but overall inflation, especially if we talk about the core inflation is headline inflation minus the volatile inflation of food and fuel. That is in the range of 5%. That is a good thing. And that is the important thing. That means the inflationary trend is not that high. But the real concern is about the food prices, where we are not seeing any kind of lower movement. Now, if we talk about the wholesale price inflation is important, but more from the academic point of view. Now it has turned into a positive territory. It has moved into positive territory. And we expect that the impact of the wholesale price inflation will also be seen in the retail inflation. So for the year as a whole, we are expecting retail inflation in the range of 5.5%. Now, if we talk about the fiscal measures, we have not seen much movement in terms of the GST, which is the key thing if we want to bring down the prices of goods and services. So at this moment, we are not seeing any kind of change in the GST rates for various items. And once it happens in the near future, say in the medium term, then we can expect some impact on the retail inflation. And that means the fiscal measures will have some impact only in the medium term, not in the near term or not in the short.
Surojit, the GST collection for December was 1.65 lakh crore rupees. So we're looking at the revenue side. How important is ensuring a budget surplus instead of a budget deficit to ensure that fiscal policy is on track?
Well, the revenues have been very robust. As you can see, month-on-month collections, they have been very good. So the new normal is around 1.5 lakh crores. Even the direct taxes side, it's been very good. So there are no major concerns on the fiscal side, and revenues are expected to remain in that range. So I think the fiscal policy has played a key role as well, and thanks to the domestic demand, and the measures taken by the government in terms of casting the net wide on revenues has also helped. So I guess that's going to stand in good stead as we head into the new year, where we will have the interim budget before the elections. So I guess on the fiscal side, there are no major concerns as of now.
Shishirji, on the trade side, you mentioned about Atmanirbhar, how important it is to ensure that imports are curtailed as much as possible. You mentioned about pulses. We have also news about Amit Shah saying that pulses imports should stop by 2028. To what extent are the other measures we are taking to ensure that, foreign exchange is used properly, that commodity imports are restricted to the maximum possible, like oil and pulses?
Arjun, there are two sides to that. One is, of course, the export side, and another one is the import side. Currently, the export situation is not good because of the geopolitical region. It is nothing to do with the domestic factor, but because of the geopolitical regions, we are not seeing the kind of increase which we were expecting in the export. And that trend is likely to continue. Another disruptions is the Red Sea disruptions, where the supply is going to be affected. So on the export front, not a very happy situation. In terms of import, there are two key items we all know. One is the fuel and the other one is the gold one. The gold import we have seen some kind of rise in the month of October and November, mainly because of the festival demand. Now we are expecting that the gold import will be lower. Fuel, we have been benefited by cheaper import from Russia, and that has brought down the import bill. The good thing is that we are getting good amount of money through the FDI and FPI investment in the stock market and FDI in various companies, and that is why FDI has picked up. So at this moment, Forex reserve level is comfortable, and it is likely to be comfortable. Only worrying factor is that we are not seeing the kind of increase in the export, and unless we see the export increase, the overall forex basket will have to wait for further improvement. But as I told you, that one, of course, the import factor, and the other one is also that remittance is also picking up. And recently, World Bank come out with a report and it show that India is the top country in terms of the remittance. So these are some of the factors which are affecting the forex reserve, and we should also remember that the level of forex reserve is also going to have an impact on the rupee. I mean, this is one of the factors which is going to impact the current movement of rupee. So this is the entire story about the forex reserve.
Do you have any econometrics on trade deficit and current account deficit which can show how we are tackling the headwinds of forex risk? You mentioned about the dollar. The US dollar index has been quite robust. It's 102 right now. How are we tackling devaluation of currency?
See, first of all, rather than using the word devaluation, we should use the word depreciation, because devaluation is the system induced and depreciation is the market induced. So we are seeing a situation of market induced decrease in the value of Indian currency. And that is because of the higher demand of dollar to foot the import bill for fuel, because the fuel prices have gone up. Now, if we talk about the current account deficit, which is in the range of, say, 1.2%, if I remember correctly, 1.2, 1.5%, which is a slightly in a better situation at this moment. And that is mainly because of the import is low as well as the export is low. But the real concern is that if there is a rise in the fuel prices, then the current account deficit will be affected. And going by the current trend, we may see some kind of rise in the crude prices as well as the product prices in the near future. And that will have some bearing on our current account deficit.
Surojit, how do you see Government of India approaching the interim budget when it comes up for presentation in Parliament? Clearly, the focus would be on the fiscal policy when the budget is presented. What's your view?
Well, the finance minister has said that there are no grand announcement expected. But given the past trends, we might see few measures being announced, which may be followed through in the July budget. So the whole focus would be on efficient delivery of public services, protecting growth, and keeping inflation low. So the main thrust would be those areas, and also, measures on the agricultural front, measures on the trade front. So we can expect some announcements, which would be followed up in the full budget in July when the new government presents the budget.
Arjun, can I add something?
Please.
Interim budget come vote on account. There is a very interesting thing. There is a rule which does not prohibit the government of the day to make a policy announcement in the interim budget. Why I am saying this? Because on the day of the presentation of the budget, the government of the day is having full majority. It is enjoying the confidence of the House. So there is nothing in the law which says that you should not make any policy announcement. And that is what we have seen in 2004 when Jaswant Singh was finance minister. He proposed extension of Antyodaya Yojana. He also announced setting up of a defense non-lapsable fund. Then in 2009, when Mr. Pranab Mukherjee was the finance minister, he went by the convention and he did not make any announcement. In 2014, when Mr. P. Chidambaram was the finance minister, he made some announcement, especially regarding boosting the demand by lowering the duty on automobile sector and consumer electronics. In 2019, when Piyush Goyal was the finance minister, he made announcement about the Kisan Samman Nidhi, and he also announced hiking the standard deduction limit. So why I'm giving all these examples? I'm giving this example because there is nothing in the law which says that the government should not make any announcement. But it is the convention which says that the government which is going for the poll, they should not make the announcement. And there's always a debate between convention and the rule. Rule is not stopping the government to make any announcement, and that is what we are expecting in this interim budget also.
Surojit ji, speaking about announcements, we also have the credit figures coming up from retail banks and NBFCs, where credit growth has gone up between 13 and as much as 31%. So consumption is very robust in the economy as far as the average consumer is concerned. What about the lending rate? Is that likely to come down? What is the monetary policy going to be of the central bank? We know that the Fed in the US is going to bring down the discount rate in this particular calendar year. What is going to be the approach of the central bank, the RBI, and will the retail banks take a cue from it?
RBI's monetary policy has already said that, they've held rates. So it will all be dependent on the inflation data. And all expectations are that rates will be cut in the second half of the year. But that is also dependent on how inflation moves, retail inflation. So that is there. Well, as far as the Fed is also concerned, the recent minutes have shown that the Fed also has clearly stated that inflation remains high. So the initial euphoria of possible cutting of rates, Fed rates, has also dissipated for now. But yes, there are hopes that down the year, maybe say 3 months, 4 months from now, rates could come down globally as well as in India. But again, they would all be dependent on how inflation moves, how the geopolitical situation evolves, and how the risks recede or whether they increase. So it's all dependent on a host of factors.
Shishirji, is there any kind of window guidance by the central bank to retail banks to limit the lending rate? Because looking at 6.5% as a repo rate, the retail institutions are lending at a much higher rate depending upon the risk profile of the borrower. How do you see the central bank, which has autonomy under the constitution, responding to that?
Of course, if we talk about the personal loan here does not include anything which is called home loan or education loan or auto loan. But for personal loan, RBI did issue some guidelines and they said that the banks need to increase the risk-weight asset because the rate of growth of personal loans, we all know that personal loans are called as a non-securitized loan. That means no collateral is available for that. And that means too much risk is involved with this kind of loans. So RBI did issue guidelines for that and did ask the banks to provide higher risk for all the personal loan. In terms of interest rate, it is entirely the prerogative of the scheduled commercial bank to decide that what should be the interest rate, and it all depends upon the asset liability, that what kind of asset they have and what kind of liability they have. Going by the current liquidity position, which is sometime, especially during the month of December because of the advanced tax payout, and we may see the same kind of situation in the month of March, the liquidity may not be that favorable for the banks to maintain the interest rate at the lower level, or they will try to find out some other ways to restrict the loan growth rate. But I don't think that at this current moment, banks are going to slow down the loan, especially the commercial loan. There may be a slowdown in the personal loan.
Surojji, India from a $3 trillion economy is now moving into the $4 trillion economy. If you look at this type of a growth, it is linked to gross domestic product, the productivity levels in the economy, and also credit growth. But for the benefit of our listeners on this program, how do we assess India's valuation in terms of a $3 trillion economy moving to a target of $5 trillion economy based on the number of years of productivity? Could you give us a little bit more clarification in terms of how this is computed?
Well, it is all a function of growth. So if the growth rate is, say, between 7 to 8%, one should see a progression of the economy, because India is one of the fastest growing major economies in the world and is likely to remain so for the next 2-3 years. And by all reckoning, India's growth is here to stay for, say, a term of 10 years, 7 to 8% growth. That should see a progression, natural progression of the economy and the increase in the size of the economy from 3 trillion to 5 trillion. So that is a natural phenomena of growth that is going to take place, the demand that is going to take place. But again, there are risks. But yes, all forecasts point to a 6 to 7%, maybe 8% of the medium term. And that should, be very good for India's growth story.
Shishir, we have seen valuation of assets go up substantially in the last 3 to 4 years. And if you look at the stock market, where securities valuations have gone up this year itself, if you compare it from 2022 to 2023, Sensex has gone up by 18% in terms of valuations. We are at record highs at 72,000 on the Sensex. What is your view in terms of asset valuation, where a lot of buying interest is developed? There is more interest in investment in the stock market and asset purchases. What is your view in terms of this type of consumption?
See, if you talk about the stock market, certainly things are very favorable at this moment, and especially after the Federal Reserve indication about not raising the interest rate, it has given a fresh lease of life to the stock market, and that is what we are seeing. There could be some blips because of one geopolitical incident or another geopolitical incident, but as of now, we do not see any kind of downward movement or very bearish kind of movement in the stock market. We will see some kind of upward movement. Sometimes there will be profit booking, but the stock market will move in a positive environment. In terms of the valuation, of course, the prices of some of the stocks have gone very high. That may be area of concern, especially from the investor point of view, that should they make investment at this level or not. But there are a number of stocks available where the valuation is very attractive, and there they can put money. In short, the stock market is doing well, and it is expected to do well, provided that there is nothing at the geopolitical level which is causing some kind of concern or tension. And second, if there is no interest rate hike, please remember, interest rate is the biggest enemy of the stock market.
If I may add here, the one of the reasons why Indian stock market is doing well is the fact that the interest of foreign portfolio investors is shifting towards India in a much, much bigger way compared to China, because China is grappling with a whole lot of problems on its real estate sector, the broader economy. So there's a shift here. There was a report recently of the theme that India grows, China slows. So that is playing out here as well. So the stock market is going to remain strong. And also the fact that, retail investor participation has grown. There are a lot of young people coming into the market. The mutual fund industry is growing. If you look at the numbers, they tell you a very good story. So I guess all in all these factors will play out in the months ahead and bode well for the stock market.
Shishirji, when we talk about corporate or public finance, we also look at bond investments, fixed income investments. You said the interest rate can be beneficial to the bond market, or it can work against it. What's your view on the health of our bond market domestically and overseas?
So if we talk about the domestic bond market as well as the overseas bond market, the important thing is the yield. What we saw, I think a month back, the yields were very high, and that were causing some sort of concern. Now it has settled, and I believe that going by the current trend, especially in the short run, we are not going to see much movement in the yield. At the same time, we also have to keep an eye on the borrowing level to be announced on February 1. That will also decide the future course of action for the bond market, at least for the next 3 to 6 months. So, going by the current trend, we are not seeing much movement, but of course, we will have to wait till February 1 to find out the overall borrowing for the fiscal year 24-25.
Surojit, would you like to weigh in here in terms of the Treasury issues or bill notes and bonds which would be used by the government to carry out expenditures, and the fiscal responsibility and the Budget Management Act by which the government is disciplined to ensure that it does not go beyond 3 to 4% of GDP when it computes its deficit? So how do you see, even in the interim budget, that the government is able to plan this effectively?
So the path has been very clear. The fiscal consolidation path of the government has been very clear. Because of the COVID, there was emphasis on spending, and government spending was the key to holding up the economy. So after that, there is a clear consolidation path, and I guess the government will do everything to maintain that trajectory of bringing down the deficit which has been there. And the interim budget as well as the budget in July will give us a pointer to what in store for government borrowing, how much is the borrowing, and what's the deficit number for the next 3-4 years.
Well, Surojit, so far our discussion has been focused on government, typically on fiscal and monetary policy, currency control, how it's able to formulate policy for imports and exports for the benefit of the economy, the purchasing power of the rupee. Let's now move on to the private sector. A lot of policies also focused on new technologies and development, Startup India, Stand Up India, IPOs, FPOs, financing in order for the private sector to weigh in and generate employment as well. So how do you see them performing in 2023 and going into 2024?
That's a very key question of how private investment will pick up. It has shown signs of picking up. And as we go along, there are investment proposals from big corporates as well as the MSMEs. So I guess we will have to watch how this improves. It will, again be a lot of heavy lifting that the government has been doing in terms of its investments in infrastructure. So I guess this year and next year would be very, very key for the private investment to grow and pick up and do some of the heavy lifting that the government has been doing. And whatever data is coming in shows that it is picking up and there are intentions of investments coming in. The policies that are there in terms of the PLI schemes for boosting manufacturing seems to be taking off. For example, smartphones in terms of other categories. So I guess this should augur well, boost manufacturing as well as increase private investment.
What is the nature of the sentiment created by the Honorable Prime Minister Shri Narendra Modi for paving the way for private sector investment in the country by maintaining relationships with trading partners overseas and creating policy for manufacturing and services in India, including agriculture?
Well, the whole focus has been on the ease of doing business. And that has been the guiding principle so far. If you look at the number of reform measures that the government has taken over the years, it has really been to basically doing business climate in terms of cutting red tape, in terms of taxation, in terms of investment, in terms of acquiring land, in terms of environment clearances. So there is this whole ecosystem, create a better infrastructure for the private sector. And there is an intention to have a greater role for the private sector in terms of the private sector policy that was announced last year. But unfortunately, the movement has been slow there. But I guess after the elections, we will see a lot of movement in that sector.
And finally, on disinvestment, what are the offers for sale looking like?
Well, disinvestment has not progressed much this year. If you look at the numbers, obviously for reasons that are well known, maybe there is not much appetite to go ahead with big bold privatization at this juncture when you have elections coming in. So I guess disinvestment is likely to miss the target, but for this year, and as I said before, after the elections, we will see a lot of action on the privatization front.
Well, thank you so much, Surojit Gupta ji and Shishir Sinha, for being with us on this very valuable talk on India's economic growth story and telling us how India has been able to overcome the challenges and obstacles and ensuring that it is maintaining a steady line of growth year in, year out and moving into 2024 as well. Thank you so much.
Thank you.
Thank you.
You were listening to a discussion on India's economic growth story and the future roadmap. The participants were Surojit Gupta and Shishir Sinha, economic analyst, and Arjun J. Chaudhary, anchor. This program was produced and presented by the News Services Division of Akashvani. You can listen to it on a mobile app, News on AIR. This program is also available on a YouTube channel, News on AIR Official. You may share your feedback about this program through email at airnsdtalks@gmail.com or WhatsApp on 9289 094044.